Hi, everyone. This is Sabrina, also known as Mrs. Perfect Credit. And I know I don't look the same. I'm not feeling well and I'm a little sick, contagious, so I've got to stay in my room. But I know I committed to doing these releases each week. So we are in for our tip number 3 of the 13 tips to excellent credit. And this one is focused on keep your old accounts open. All right, so I want you to think of that old account like fine wine. Like, would you throw away aged wine? So, let me just tell you, I don't drink wine, but I hear that you don't throw away aged wine. But just think of that old account as that aged wine. The older it is, the better it is because your credit history matures over time. So, just wanted to go into the impacts of closing your account. This is huge, and I actually didn't realize how deep this was. So, the credit utilization rate accounts for about 30% of your credit score. The credit history makes up about 15% of your credit score, and the credit mix makes up about 10% of your credit score. And closing out an old account can actually impact each one of these categories. And there's 5 categories that impact your credit score. So this is huge by closing an old account. So I want to make sure you hear that again. This is huge if you close out an old account. So let's talk through this. So first of all, the credit utilization rate. The way that it impacts this, uh, hopefully you saw my tip number 2. If you didn't, make sure you go back to tip number 2 and then come back and finish listening to this one. It would make more sense. But at a high level, if you close out an old account and let's say that credit limit was $10,000, right? And you close that out, well, that's going to increase your credit utilization rate, which is going to decrease your credit score. So you want to keep that old account open for the credit utilization rate. Moving on to the credit history. Now, the credit history is a length and average of accounts. So, if you have an old account that's been open for over 10 years and that's your oldest account, well, if you close that, that's like starting your credit history all over again. So, you don't want to do that. And I totally understand you may have a lot of reasons for closing your account. I remember when I first started out with on my credit journey and I had really bad credit. And the first thing I wanted to do once I paid off my card was close it out because I no longer wanted to see those 30-day past history, 90-day past history. I just wanted to get rid of it because it looked so bad on my credit report. But little did I know, it was still on my credit report because it was still going to show for up to 7 years. So if it's still going to show anyways, just keep it open because it's going to help you in the long run. So don't close out those old accounts. Impacts the credit history. Now let's talk about the credit mix. Now what the credit mix is a type is different types of credit accounts. So it's like your installment accounts and your credit cards. You have to have a nice balance between the two of those. So your installment account is like your mortgage or a personal loan. And of course, the revolving accounts is, of course, like those credit cards. So if you have like 3 installment accounts and then 3 revolving accounts, that's a great balance. That's a great credit mix, right? But if you close out your credit card, you're going to imbalance your credit mix just a little bit, but it could be enough to drop your credit score. But the good news is this only impacts 10%, but every point count when it comes to getting those low interest rates to save you money on a monthly basis. So those are the some of the impacts. These are the main impacts. There's probably other impacts, but I just want to talk about the main impacts of closing an old account. So let's talk about strategies. First of all, try not to close your old accounts. I can't think of a reason why else you would close out an old account, but you may have a reason that you need to. But if you don't, just please try not to close out your old account. And before I get to the second point there, quick question. Did you know a creditor might close your account because you're not using it? I've had that happen to me as well. And I didn't know that. Um, all of a sudden, my credit score dropped, and I was like, I didn't do anything wrong, paid my bills. Um, I didn't close out accounts myself. I didn't have anybody to check my credit, so I just had no clue why my credit score dropped. Um, but I didn't know that they had closed out my account. Apparently, I didn't open up the letter that they sent out saying that if you don't use your account in a certain amount of time, they're going to go ahead and close it. So, what I want you to do when you finish watching this is go check on your old accounts. Check and see when's the last time you used it. And if it's been a while, make sure you use it before your creditor closes it out. One of the things that you might want to do is another strategy is just add a reoccurring bill on that card and put it on auto pay. And so, therefore, you don't have to worry about either the creditor closing it out or you closing out because like I was embarrassed of all those late fees and things like that, or any other reason why you might want to close out your old account. That would help to make sure it stays open and it can continue to positively impact your credit score. All right. So, as we wrap up here, I just want to say that maintaining a high credit score actually sets you on a financial journey that can help your children and your grandchildren by you understanding what impacts your credit score and improving your credit score. That's going to help you to be able to explain to them on the importance of good credit management and get them a great start on their credit. So, my question is, are you ready to improve your credit? If so, let's go. Go to www.excellincredit.com. Take one of my credit courses. The next one will be the 3-day credit course that I put together. Is on the Great Discovery platform. It's very detailed about the credit score. We talk about the credit report on how you can actually understand your credit report, how to read your credit report. I bring on a credit repair expert as well to go through on how you can dispute things on your credit report. I bring in a mortgage expert to talk to you about mortgages and what impacts your mortgages. At the end, I go through helping you to create a plan. So make sure you take that course and then also sign up for our monthly group accountability so that I can help you stay accountable on reaching your credit goals, whether you're trying to reach 700 or you're trying to reach 800. I want to watch you on your journey and help you to understand what impacts your credit. And then once you get to excellent credit, you can start working on leveraging it so you can start building wealth for you, your family, and your family's family. Um, so that's all that I have for tonight. I look forward to connecting with you. Email me. Uh, Let me know how you're doing on your credit journey. Like, if you decided to improve your credit, make sure you jot down what your credit score was and then give me updates monthly on how you're doing on your credit and if I've been able to help you. I would really love to know that. You can put a comment in the notes as well or in the chat. So again, thank you. Thank you for your patience with me as I continue to get healed from my sickness. I'm almost there, and I'm grateful to God that I was able to come and give you another credit tip. So please like, share, subscribe to my channel. I'll continue to put some credit tips out there. And again, if you didn't see credit tip number 2, make sure you go back and watch credit tip number 2. All right. Um, Thanks, everyone. And I look forward to you in the coming weeks.